Let's go back to London now. The Brexit plans of UK Prime Minister Boris Johnson suffered a massive setback in Parliament yesterday. Now Johnson is putting the wheels in motion to trigger an election in the UK. Joining us from London with the latest is David Madden. He's a market analyst at CMC Markets. David, thank you very much for joining us. Where is this going now? Are we headed to a January 31st extension, a new deadline on the whole process, or are we indeed headed to a general election?
We could wind up actually with both scenarios, in that with the vote last night, whereby MPs are kind of taking control of the agenda, they could press Boris Johnson, the Prime Minister of the UK, to request an extension of 3 months from the European Union. But the next EU summit is the 17th, 18th of October. So it will be the opportune moment for Mr. Johnson to request that particular extension, but then look to actually hold a new general election sometime in, say, November or December, possibly, when the UK has actually set apologies in around October or November, mid kind of November, after the 31st deadline. Essentially, the moves we're seeing here in the pound this morning have actually been fairly positive. To be fair, a lot of the negative news we saw in sterling in the last few days was kind of priced in from what was already priced in. That's why we saw a sharp plummet yesterday, but we did see a rebound yesterday, and that is playing out today. So the fear of the UK leaving the European Union without a deal on the 31st of October has died down, and with that, we have seen some bargain hunting in the pound.
How much of a surprise were the events yesterday in the House of Commons? Last night I read one of the leaders in the most recent issue of The Economist, and it was urging parliamentarians in the UK to do exactly what they did, set aside their differences and stop Boris Johnson from pushing the country out of the EU without a deal. How much of a surprise was that defection of 21 members of the Conservative Party?
Well, given what was going on in the news feed yesterday, it wasn't an entire surprise. It is worth pointing out it was quite close. There was a lot of talk either way that the vote could have gone either way. But what's really kind of surprising is the fact that Mr. Johnson is looking to potentially withdraw the whip or expel some members. And we've had a number of Tory MPs who voted against Mr. Johnson last night, already stating that they won't be standing again for the Conservative Party should there be a general election. And to be fair, it seems to me that they were stepping down before they were pushed. Politically, things are very much heating up here in the UK. But as I said, the volatility in the past 24 hours in the pound has certainly died down. And it's all to do with the fear of a no-deal Brexit. And if that gets pushed back for whatever reason, a general election or an extension or the possibility of both, that's going to extract volatility from the pound.
And David, I agree with what your conclusion there. But what is 3 months really going to do for the process? We had 2 deals that were done with the EU that were turned down by Parliament. And what likelihood is there that a 3rd or 4th or 5th deal is just not going to be turned down?
Gordon, I fully agree. It seems to me that it's more a case of actually wearing down certain members of Parliament to actually either look to soften the Brexit stance or in some quarters look to actually revoke Article 50 and just call off the entire idea. I fully agree with you in that 3 months isn't really going to buy you a whole lot of time from a practical point of view. It'd be one thing if the people looking for the seeking extension said, we're working on this project here in relation, say, for example, technology on the Irish border, for example, but we need some more time to kind of work it out. But it just seems to be an extension for an extension's sake, and that tells me more that that's about kind of wearing down and trying to ideally kind of watering down the Mr. Johnson's Brexit plans rather than actually genuinely coming up with an idea to actually work around this. So I think this, as you said, this 3-month extension, in a few months' time could be yet another extension.
There are more forecasts on what the damage to the UK economy would be in the event of a no-deal Brexit. Most recently, Citigroup estimating that UK retailers could see their earnings drop by 30%. Are those type of forecasts, has the public gone numb to those type of forecasts? Have they heard too much of that?
I think, to be honest, and I would be included in that an assessment as well. It's a case of it's quite non-stop, the kind of relentless kind of commentary and predictions about what a no-deal Brexit could do. But it's also worth pointing out what actually an extended period of this continuous extensions is also doing. We saw some poor manufacturing figures recently from the UK, some construction figures as well recently from the UK. Businesses can't plan out of their operations if they don't know what's going to be in the pipeline 3 months, 6 months, 12 months down the line. And this sort of paralysis that we have because things are all up in are all in limbo is also impacting business. So having a prolonged period of an extension for the sake of avoiding a no-deal Brexit is actually in itself doing some harm. There's an argument to be made a no-deal Brexit could actually cause much more harm. But if we did have a no-deal Brexit and we knew it was coming down the pipeline, at least then businesses could plan for it.
David Madden, thank you as always for your insight. He's a market analyst at CMC Markets in London.